Hey everyone, welcome back to the channel. Today's video breaks down one of the most legendary books in investing, OneUp on Wall Street by Peter Lynch, the legendary mutual fund manager who averaged a 29% annual return for 13 years at Fidelity Magellan. His biggest insight? The average person can beat the pros if they invest in what they know. So if you're a student, professional, or beginner investor, this book is your guide to spotting great stocks before the market does. Let's dive into 7 key lessons. Peter Lynch believes your best investment ideas are hiding in plain sight: your grocery cart, your workplace, your hobbies. For example, if you love a restaurant, store, or app and it's expanding, you might have found a great stock before Wall Street catches on. Quick action. Write down 3 products or services you use often. Research their parent companies. Lynch says spotting a company isn't enough. You need to dig deeper. What's their business model? Are they profitable? Are they growing sustainably? He's big on understanding the company, not just the stock price. Quick action. Read 1 annual report this week. Google a company name investor relations. Lynch divides stocks into 6 types: slow growers, utility companies, and so on; low risk and low return; stalwarts, big stable firms like Coca-Cola or P&G; fast growers, small companies with rapid expansion; cyclicals. These rise and fall with the economy, like auto and airlines; turnarounds, troubled firms trying to recover; asset plays, undervalued based on assets like land or patents. Quick action. Match your favorite stock idea to one of these categories. Lynch says, far more money has been lost by investors trying to time corrections than in the corrections themselves. So, instead, just focus on good businesses and invest consistently. Quick action for you. Automate small investments every month. Don't wait around for that so-called perfect timing. News headlines, TV pundits, stock tips, they're honestly mostly just noise. Lynch says most people lose money not because they pick bad stocks, but because they panic and sell too soon. Here's a quick action. Before you buy a stock, write down why you're buying it. Refer to that note when fear hits. Here. You know, Lynch really loved companies with boring names and, well, unsexy businesses. Think waste management or packaging firms. Why is that? Fewer investors chase after them, but honestly, they often have some pretty solid returns. Quick action for you. Try searching beyond the popular tech stocks. Ask yourself, what's quietly growing out there? Investing isn't a get-rich-quick game. Not at all. Lynch held on to stocks for years just to let them compound. He said, the real key to making money in stocks is not to get scared out of them. So, here's a quick action. Pick 1 company you'd be proud to hold for, say, 10 years. Here's your OneUp investor checklist. Invest in what you know and use. Understand the business, not just the hype. Make sure you categorize the stock correctly. Avoid those market timing traps. Tune out all that media noise. Look for boring, consistent performers. Think long-term, let compounding do its thing. You really don't need Wall Street to build wealth. What you need is patience, curiosity, and a little bit of common sense. OneUp on Wall Street shows us that investing doesn't have to be complicated. You can actually beat the pros just by staying close to your world, trusting your eyes, and playing the long game. So if this helped make investing a bit simpler for you, go ahead and hit like, share your favorite everyday product you'd invest in, and subscribe for more book-to-action content. And hey, remember Peter Lynch's golden rule: know what you own and why you own it.